Yay, morning and afternoon from London. Morning, it's the Mohawk Forex scalping team, and we're here today on one of the biggest news days in terms of the amount of data released. It's all because of Thanksgiving holiday in America. And we're going to be scalping some of this news pre-market and when the market opens, and then we've got some news about 30 minutes after the US Open as well. So this is a packed data day, so a fundamental trader's dream. And we're looking at the US30 on our 3-minute time frame, as always, for those who follow. All the information on how we're doing and what we're doing and the axe trading system and joining our Discord group is in the description below and at www.mohawkforex.com. So we'll just listen to Bloomberg and keep an eye on the general news while waiting for this news to come out. But today, this is what we've got. This is it, all because it's packed into one day because of the holiday. There's no trading really Thursday or Friday. We've got the initial jobless claims, continuing jobless claims month on month. We've got the GDP. We've got the durable goods. We've got goods trades balance, import-export. And all this is coming up in the next 8 minutes. And then we've got the Michigan, one of our favourite, consumer sentiment report, and new home sales and personal spending income all the same time, 30 minutes after the open. So we're going to have a good 90-minute stream here and try and catch all these news results and see which way they turn the markets. And obviously pre-market we're going to go reverse. That's what we usually try and do. So we'll wait and see how much of this stacks red or green either way. And ideally you want it all to be the same way. Obviously with this many news results in one block, we've got to sift out the high impact ones and go with those ones over any medium, depending on the result. The jobs claims one will be the big one, followed by the durable goods, and then the trades balance as well. The trades balance one at the moment is looking to be higher than expected, and just very similar from minus 96 billion to minus 90.2 to minus 96 billion, a slight increase. But the jobs ones, continuing jobs claims, we're looking at a decline here. And again, the lower the figure, the better. Again, want things all to go kind of in the same direction if possible. Durable goods, month on month. Again, higher expected figure. Again, it's expected to be 0.2 from minus 0.4. So again, everything's predicted and priced in already to be higher than expected. And as you can see, US30 is taking a bit of a slide, as is DAX this morning, on various different news out there. And it's almost like pent up waiting to explode. It's been in our neutral zone, as you can see, in and out for the past few hours. No real movement. One kind of buy we could have got here. No sells, just that one buy is all we potentially had, which was worth kind of 100 points or so. Yeah, so that's about it. I don't usually trade US30 in London period anyway. Let's just wait and see what we're going to get on this result, and we'll go.
The academic pointy head stuff. I'm sorry. Food and the rest of it matters.
It matters, perhaps not with respect to the longer lasting inflationary aspects that I think the Fed is really looking for. The issue that I have is we now have a better sense of the composition of the Federal Reserve. What is the more important statistic for them at this point? Is it employment based, Mike, or is it the inflationary readout?
Well, they're trying to juggle both, and the big
just loading up here, so making sure our broker is on and ready to go.
Or whether you think inflation will be slowing down, and that's what we're talking about, the PCE on a month.
So yeah, I mean, I'm hoping it is better than expected news for the economy, and so we get some nice buys. We get a nice bounce off our average RSI line here.
from Friday.
which we know that once we get a break, usually on the RSI line like here, you can see how you can get in on an aggressive buy below the baseline and then wait for it and get a second buy. So an aggressive scalper could have got 2 trades here because the amount of time the RSI had spent overall below. And you could have even got a cheeky buy here, look. And if you use the baseline as your potential take profit. This is what it's all about, reading the RSI in conjunction with price action. Excuse me.
Spending their money.
Yeah, they are still spending their money, and that's something we see a little bit of in the GDP report today. And in the
And we've got 4 minutes to go for all this. And like I said, initially we're going to be looking for the jobs and we're going to be looking for the durable goods. Trades balance looks to be in kind of the ballpark, so but we're going to see, you know what I mean, I like to see all green or all red or one leading the way, and then like I say, for me, I'm going to go the opposite way. Market manipulation, pre-market, so if the news is good for the US30, I'm going to go for a sell. If it's bad, we're going to go for a buy, and then we'll reverse that on the open, and vice versa on gold. Looking at DAX look, trying to pull back for a second leg W here. Just waiting on this pullback, same scenario. And on gold, as you can see, gold is getting ready also to either take that dip further down, bounce back to our trend line, and on the news. There we go, the big one. So we're waiting for this. And like I say, gold, we usually go with the news on this one. And we're going to flash in and out. We're not going to set any preset take profits or stop losses on this. You don't really have time to. You want to react, get in, get some green and get out again. This is true scalping. You know, we're not looking at risk to reward ratios and stuff. We're watching the charts live. If things go totally wrong, we'll end the trade in a loss, of course, and wait to take the reversal. As we have done a few times, you know.
As well as we've heard from Eric Nelson of Wells Fargo, Michael McKee, we're thrilled will stay with us through the huge amount we see here in 5 minutes as well. Lisa, I do want to draw the attention to an ever stronger dollar.
Have a look at what's going on investing.com, what they're saying.
Real deterioration in the euro over the last hour.
Retail stocks head lower. What's moving the markets?
I'm sorry, Lisa. 111 euro is one of the
all on here if you don't know about what's news to trade.
Agree, and frankly, the strength and the continuing strength of the dollar as well. There was a story this morning that I was reading about supply chain disruptions and how they're actually getting better in the United States, but getting worse in Europe. And it kind of exemplifies this divide that in the United States, there is a feeling of return to normalcy, regardless of what the numbers are. While in Europe, you have Germany.
We always listen to Bloomberg, just keep an eye on the general news as well, what they're saying.
Some of the cases of COVID. Really a different dynamic heading into 2022.
And the dynamic here for Kaylee Lyons is for so many different parts of America, so many different parts of our social structure. It's a different inflation, a different market reaction.
Well, I think we're exactly right to point out that food and energy costs do matter when talking about inflation because people are facing higher prices at the pump. If they're facing higher prices at the grocery store, then it calls into question their ability or desire to spend on some of those more discretionary items. So yes, those may be volatile, but they do also have an impact on the ability of people to tolerate price increases across other categories.
On radio, on television, please stay with us here. It's not only the news at 8:30, 10 a.m. as well. It's the analysis of it. We're thrilled that Michael McKee will lead our coverage here as we look.
Futures looking to the downside.
Stay with us. Futures negative 15. This is Bloomberg.
Go, countdown's begun. Just a minute to go. Good luck, everybody. Like I say, you can trade USD, JPY, CAD, Swissy. There's lots of different things you can trade. I just personally trade the US30 and gold on these news events. You know, and again, there's personal preference. I like to get the bang for my buck. Depends on your account size as well. So, but I teach people all that inside our VIP Discord group as well. Let's see what we're going to get. We're ready on gold and we're ready on US30. US30 is always the slow one to react. That's the one good thing about this if you don't get the initial move. I was looking there, so right on a heavy support, so that's great. The news is good. Here we go. Jobs is worse than expected. Continuing jobs claims.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。
Nice mixed bag. Yeah, it's looking worse than expected. GDP, jobs, corporate profits. Let's have a look. The initial jobs claims to pack out as well. See what we get. Gold, you can see flashing around. US30 as well.
Bloomberg has enhanced search on the terminal to deliver what you need.
Durable goods. Overall, about break even, one good, one bad. The main one was worse than expected. Corporate profits and GDP was worse. Wholesale inventories was worse. Trades balance was better than expected, quite a bit. Jobless claims here look bad as well. So I'm just in on buys on US30 at the moment.
Will we get to herd immunity, or let me ask it a different way? Have we given up on herd immunity?
See if this pushes up a little bit.
You will know when you get to
Comes out that neutral zone.
when the cases are so low.
RSI 51. Let's see if it gets to 50. Just touching our trend line. It's been really nice.
Know what that percentage is, David.
Yeah, that'll do. Got 3 trades away there on the buy on US30. We've got 64, 60 and 55. So it's in the group. So that was a nice $300 there in 30 seconds.
Bloomberg surveillance. Good morning, everyone. Economic data coming out right now. Futures negative 14. Let's look at the 2-year yield, 4 digits, 0.6161, and we'll see how that unfolds as we get a wall of data helping us out here with this true
Pushing up now. There we go.
It comes out actually, maybe it's because it's Wednesday, it's coming out quicker than it has over the last 6 months or a year as well. What do you see?
Maybe all the government employees.
This is US news.
Jobless claims down to 199, below 200,000 for the first time. I'm going to caution that because we've had a holiday, a Veterans Day holiday, and we've had some confusion about jobless claims, that this may be an outlier to be that low, but it is certainly going to be seen.
Wait for this pullback on gold.
Pressure on the Fed that we're getting close.
Going and doing gold. I went in on US30 on there. Like I say, it's a slow moving one. So gold now, I won't be taking a buy just because we're right on that trend line. But
this is interesting. Comes in at 82.9 billion. The forecast was for 95. Last month, September, was 96.3. So it suggests a much stronger start to fourth quarter GDP.
good news overall. You had jobs claims 1, 2, 3, 4 against 1, 2, 3. So it was slightly better than expected in the end. I got the buy in there on US30, based purely on the durable goods, the jobless claims.
going to be as concerned about that, nor will the markets.
As you can see, I told you gold go the way.
Will get some attention. That's durable goods.
Now let's see if that drops back in. Going to
second month in a row that we see a decline. It was down 0.4 in September. You take out transportation though, and we're up 0.5. So there is probably
sells it on there on gold. There we go.
effect in there, and the number of jets that they sold during.
Wait for them. Cool. Just close one in a profit already straight away.
Hard to sell. One more number, quick, Tom.
Down.
This is the key one, and that's capital goods orders, non-defense ex-air. This is the proxy for business spending, up a pretty strong 0.6, and the September number revised to a 1.3% gain from 0.8. So businesses are spending.
Let me look at the
Okay, we took one loss there, 16.26, just because it didn't clear out in time, but I got a 45 and a 43 on the sell on gold. Nice. I'll just post those so you can see. Sometimes you'll get a loss purely because the broker closing the deal, executing not as quickly as you should do.
There's not much movement. Initially, people were trying to work
I'll
through.
try and open 2 or 3 positions at a time, that's all.
Claims coming out so strong, but as Mike said, there is a seasonal aspect to it. There was the initial knee-jerk pop. People are reassessing. It seems like right now the bias is for reasons for the Fed to hike, and I think that that's what we saw in the knee-jerk reaction, Tom.
And again, the revision's very important there and across durable goods. I always take the 3-month moving average of durable goods. McKee says I'm wrong to do that, but what's he know? But what he does know is how to look further at these numbers. And Mike, I want to focus here on the price dynamic of second look GDP, which is OMG inflation, and take that out to 10 a.m. where we get, as you said earlier, the real look of inflation.
Yeah, well, the thing about the PCE deflator that we're getting now is it's backward looking.
Okay, now we should be able to get some more.
And it's up pretty much where it was just before, but we get an October number.
Sells now, hopefully on gold. It's getting on US30 again. Popped up nicely.
Services than the CPI, so
Down.
a much better idea of where the Fed thinks inflation is at this point.
Can you tell, it's a completely unfair question before we go to Marvin Lowe, Michael McKee, but you can tell looking at this data or what we're going to see at 10 a.m., the supply shock dynamic of this nation, when you look at export, import, and all the other soup that we see, can you say, yeah, the supply shock is ebbing?
It looks like the supply shock is beginning to phase itself out with exports.
Because we heard that from Mike Wilson of Morgan Stanley.
With imports starting to...
Perfect, so we're just holding and seeing if the RSI is going to pop up to 61, 62.
Manufacturing with unfilled orders is on a new orders basis down 1.7%. So maybe we're starting to see
there that nice W pattern that was forming, and the news has helped that formation of the pattern, the wave pattern.
Mike hesitates there. Mike wants to look. We have to do theater here, and Mike wants more data.
No, honestly, the initial data, first of all, initial preliminary data, not just from here, but from elsewhere, shows that supply shocks do seem to be alleviating.
Gold now, we're back in on the sells as well. Here we go, look, here's the spike down. This is what we're expecting. And I'm just going to end these trades now.
I'm going to bring a chart for you at 9 o'clock, Lisa, with the German...
Perfect. Okay, we got £50, 18, 15 and 30. I had 4 positions there on gold, and that's me done on gold.
Michael McKee going into this long American holiday, that it's a different world for Europe right now. Lagarde's world is different than Powell's.
Again, 8 minutes after the news release, and we're done on gold.
Nothing like what's happening in Europe at the moment. Europe has tended to lead us. That's the scary
That sets
part.
up the global tapestry, and of course Michael McKee advancing on the 9 a.m. hour on television. He will not be appearing on radio. Lisa Bramlett has exclusive coverage with Michael McKee in the 9 o'clock hour. Marvin Lowe will be with us right now. He's global macro strategist at State Street Global Markets. Kaylee Lyons, why don't you lead off with Mr. Lowe?
Well, Marvin, obviously, as Lisa was
There you go, it's coming down, look at that. See, as I said,
more hawkish, more quickly moving.
this spike up was just pure manipulation. Like I said, the news was overall slightly worse. Gold will go the way, will go the reverse on the opposite. So,
That's no new news. there are hints that the job market is pretty good in today's numbers. So it really does become.
US30's ditched down to 43. That's fine. We'll wait for this and see if we get a bounce back. Our trend line. We've got 2.5 minutes to go.
And let's say the second half of next year, you know, rate hikes are going to be live. But having said that, we're already pricing in mid 2022 and starting to think about May of 2022. So I don't see how much more we can get from an aggressive side of things. And the Fed probably likes that.
So far we've done 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trades. 10 trades on all that news, and we're done within 10 minutes, and we took one loss of 16.26, which is about $25, against a win of around about $400-500 there. That was it. That's the day done. We'll wait and see if we can catch a few more, and like I say, we've got the open up next, and then we're going to be trading the Michigan consumer sentiment along with the home sales and the personal spending. And the main one out of those is probably the home sales and the Michigan news together. Again, to be lower than expected. Could be a sell. And new home sales is also year on year is the same, but on the month on month, again, it's looking to be lower. This is really good when all news is pointing in the same direction. And the personal income spending, this is the only one where it is looking more bullish. Again, we could have a conflict. We could have a 2 against 1 scenario on the news, but whichever way. Like I say, just check over this again. You see, you had 1, 2, 3, 4. You had 1, 2. You had about an even split. The bigger news continuing was worse than expected. Never take too much note of the average. It's always the continuing one that's the, you know, one I always look for on news. And the GDP.
Marvin Lowe, thank you so much. Too short a visit here with all this economic data with State Street today. Greatly appreciate.
This is great. So those are good scalping.
Dollar stronger in euro dollar under a 1.12. That's a big deal to see a 111 handle. Lisa, you note bonds.
Yeah, well, just to give you some perspective.
RSI breaks the average line here. We'll get in for a sell.
Going back to June of last year.
If it pops back out of our neutral zone, we'll go for a buy. So we can stick watching this.
To do with this data.
Gold, yeah, hit the low and bounced up again. That's fine. Overall, you can see it's on its way down.
0.626% at the highs of the session, and this comes. I think it is notable, Tom, that the jobless claims were the lowest in data going.
Again, I want to be taking a buy. Once we broke out the neutral zone, and we're going to be, you know, the trend line. We've got resistance here, so you really want to avoid that for now. Done with gold. Really, we have plenty of opportunities to sell.
Idea that good news on the economic front may be
DAX
bad news, because if this confirms that the Fed is going
got screwed up a little bit because of that, but now we've definitely got a double bottom. See on there?
I think it's all it's
our support zone. So we're going to be waiting for this on DAX as well, which is really cool.
Is this negative news? We should celebrate the idea that people are actually in a good place, right? I mean, this isn't positive. I think what Kaylee is pointing out is
no, it's not. It's negative news.
Going on between the economy and market.
This is how you got to anticipate it.
Optimism might lead to more weakness as people imagine a rate regime more akin to a normalcy rather than an emergency.
I would suggest the stunning statistic of the year is 111.97, and to take that the other way, Lisa, strong dollar here. I mean, I think of Mark McCormick at TD Securities, or David Bloom, who was at HSBC. Those were lonely calls 13, 14 months ago.
Well, I think about Emily Rowland over at JH Investments. We're going to be speaking with her on the open about how she views the strong dollar, how she views the potential risk to equities in light of a potentially active Federal Reserve.
Stay with us on this Wednesday. Please travel carefully today, but before you do, stay with us. More economic data at 10 o'clock hour. This is Bloomberg. Good morning.
First World News, I'm Rika Gupta. President Biden's Build Back Better plan has a tax cut for near millionaires, but mega rich would pay more. That's according to data released by the Congressional Tax Scorekeeper. Millionaires would collectively pay a higher average tax rate next year, 33%, up from about 30%. But those earnings only single-digit millions could end up paying less. Elon Musk has resumed selling shares in Tesla. He's now more than halfway to making good on his promise to offload 10% of his stake in the electric car maker. Musk has offloaded about $9.9 billion of shares. A chunk of that money will go to taxes. And China is being ambiguous in its position over a US-led release of strategic oil reserves. The country is named as one of the participants in the effort to cool off prices. But so far, all Beijing says is that it will arrange the release of stockpiled oil based on its own reality and needs. The European Commission reportedly will announce new COVID travel recommendations as soon as today. According to Politico, the EC plans a quarantine overhaul. Countries would no longer mandate quarantines depending on where the person is traveling from, but on whether the person has a valid COVID pass. And shares of Dell and HP are higher today. Each posted quarterly revenue that beat Wall Street estimates. Businesses are spending more money on personal computers as they bring back employees to the office. The companies are two of the world's largest PC sellers. HP said that supply chain issues will, though, continue to limit number of devices that it can ship next year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 20
45 minutes till the New York Open. So we're going to listen to Bloomberg and we're going to watch US30. There's DAX, look, same patterns. Amazing how these two correlate on the 3-minute time frame. We're looking for this pushback. I'll just adjust a bigger W wave pattern on here. So that's what we're waiting for on here. Gold is just in a downward motion at the moment. It's not really going to break out this neutral zone, I can see. So we won't be able to catch a sell again if it breaks below here. As I said, the news would go reverse, and gold went with the news. Overall, worse than expected news, so gold went with it. Dow Jones is now 0.55 up, NAS is down, so Dow Jones still got room to move up to that 1% level that we look for, where we like to take reversals. Once we've got a 1% overbought, it's 0.55 at the moment, 35.813.
How does an extra $1 trillion in spending not increase inflation?
So our broker on TradingView were lower. It's never line up, it's always the way.
Very important thing that we frankly have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened.
So gold here with the system, you'd got in on a sell here, sell here, then you could have got in on a quick sell here, and you got in a sell here. You held, and even with these wicks and the drawdown here, here is your zone for stop loss. These blue zones are automatically formed, telling us, you know, high probability zones of reversal or support and resistance. When they appear in conjunction with our points of interest line, then you know it's a serious zone we had here. So even if you held sells from here, you wouldn't have been stopped out. You'd have hit your take profit, even with these spikes here, which you wouldn't trade because we knew it was the news, you know. But I'm just saying, if there was no news event, this is how you would have traded that. So you could have collected, you know, 1, 2, 3, 4, 5, 6, 7 sells there. And again, this is how we do it. You can backtest this by looking at the RSI, you see. You would, this is our creation, this RSI. So you're in on here.
When you put the garbage inside, there's a little sensor
in on there.
Garbage and speaks out. And this is one of the
In on
initiatives
here.
that we have created here. We, as the residents of this neighborhood,
In on here.
that have come together.
You can get more aggressively on all these trades. These are just the less aggressive entries.
To have a clean streets that look nice and are nice to walk in.
As you're using it in conjunction with price action, there's 1, 2, 3, 4, 5, 6, 7. So you line them up and go, okay, yes, I could have got in when it turned grey. Yes, I could have got in when it went to the neutral zone. Yes, I could have got in as it crossed the average line. Same here. Could have got in when it went red first here. Here was normal. Here you could have got in as you saw the hidden various divergence, and you could have got in on this first bit of red here. Same here. So again, these are just the safer options that you can enter in on using it. Obviously you line them up, and we're looking for 50 to 100 points per trade. So there's number 1, there's number 2. There's number 3.
They don't understand the supply chain. They don't understand the reserve issue. They don't understand it. They just know they're paying
There's number 4.
50 cents more a gallon, and they blame oil companies, gas companies, and they blame
There's number 5.
politicians.
Wendy Schiller, Brown University. That was a brilliant.
There's number 6.
Put that out on Bloomberg. Digital futures deteriorate off the economic data, -21.
There's number 7.
Watching closely goes
So if you're talking 700 points each, and you're talking $75 per trade, there you go.
It's an annual visit.
That's how you can scalp, true scalp, just using our RSI.
In the last decade than Brian Kelly. Long ago and far away, young James Gorman at Morgan Stanley would call up even younger Kelly and say, "Brian, fix my computer." And he went off and left Morgan Stanley and completely changed the travel business in this nation with the points guy. You all know the website, the 47 charges. I'm pleased to tell you up in advance, Brian's going to Ecuador for $99.47 here in a week. Well, has your world changed, Brian, because of the pitch battle in the credit card world between the traditional guys, Klarna, Affirm, and the rest? Is it business as usual for you Thanksgiving holiday?
Yeah, you know, the Klarna and
Instead of working alone, don't we have a better
Again, you can clear these off, and you can go for the more aggressive entries, which be start here. You could have gone in when
got a lot of stimulus because of the pandemic. They saved a lot of money. They just weren't spending it. Do people just
You
have
went
like
red
a
there.
vast trove of points ready to deploy?
That's normal.
Or have they already started deploying?
That one could have gone red.
there are
Yeah.
so many points. It's hard to tell because the banks don't report how many.
So we know that one was a trade. We're just looking for the aggressive entries, which would be here.
Allowing you to use those points for non-travel.
We've got an extra one here. And you could have got an extra one. Yeah.
So they're trying more and more ways for people to use them since they're not traveling as much as they were in the past. But I think what we're seeing too is
1, 2, 3, 4, 5, 6 more aggressive entries. And again, you can zoom in on these and go 50 to 100 points from the when the candle's finished. Look, easy. 1,
the key trend that I think is going to be a boon for the travel industry. They're going to see longer, more expensive
2,
stays and flights, you know, as travel continues to recover.
Brian, Mr.
3,
of Marriott and Marriott Bonvoy darkened the door recently and joined the show.
4,
And, you know, the hotel people have been through an absolute nightmare. What is the distinction between airline, the Points Guy cards, and hotel, the Points Guys cards?
6.
You know, the hotel
Yeah,
cards
bang. So if you want an aggressive scalper, you can use the RSI for that. If you want to use more a less risky one, then you can use the first option as well. And that's just one example of how you can use RX trading system for true scalping outside of trading news events.
We're going to charge you. Some hotels charge $150 just on a resort fee. You know, we on some of the luxury hotels, which is baloney.
But now we're not doing anything. There's no red, there's no green. We're overall bullish. Again, it's in a range, as we know, because we're coming up to the US Open. US30, on the other hand, taking us a nice dip down to our heavy support zone. Perfect. We're not in any trades at the moment. We're just watching, waiting, redrawing our patterns.
expensive to have that credit card. Is that the trend, that as you see more of these card companies competing with each other in those types of cards, it's just going to get
As you can see there, we had that M pattern form here.
American Express Platinum raised its rates, but they reported amazing success with it. You know, consumers do want to feel like they're part of something, that they get a lot of value out of.
M to the W.
So, you know, premium credit cards aren't going away.
And just using the RSI as your trigger points up center M, bang, crossover here, buy here, second leg, sell either here or here, 2 entry points, 3 entry points, 4 entry points, buy, back,
Brian, I'm not going to mince words. You changed my
buy
life
again,
until you came along.
buy again,
Fancy pants business class
sell,
travel. And you know, frankly, folks,
once it breaks here.
Kelly says it actually works. For the new year, for our listeners and viewers, what's the #1 way to affect cheaper travel?
Well, the number one thing is, you know, collect your points and understand how many points you have. You know, we just launched the Points Guy app where you can track all of your loyalty points in one place. We'll even give you your net worth in points. And I think people don't realize how much value they have sitting around in these loyalty points. And my #1 tip is use them.
Right.
You know, the airlines let you change your, if you use freaking flyer miles, you have more flexibility than if you buy a paid ticket. So use your miles and points in 2022.
Did you once fly from New York JFK to Heathrow and they paid you to take the trip? Did you actually do that?
No, I will always, you know, even when I use miles, you know, I always have to pay taxes and fees. And at the Points Guy, we don't take freebies from the airlines. We pay. But, you know, I definitely get a good deal when I travel.
Oh, I'm shocked. Brian Kelly, thank you so much. We're the Points Guys. Truly. Kaylee, I'll tell you, of all the internet and .com people, he's changed our lives more than anyone.
Yeah, absolutely. And points are everything, Tom. That is why I have the credit card that I do. I just really want to know what your net worth in points is. I'm like trying to think of what that figure might look like.
The numbers are so large, it's incalculable, particularly by the lawyers. We won't go there. But I'll tell you, it's great. And of course, Kaylee Lyon's trying to visit all 6 continents this year, and she'll be doing that with
haven't
points.
touched Antarctica yet, Tom.
Futures deteriorate -12ish down to -25 now on SPX. Tiffany Wilding.
Yep.
12 noon after the 10 a.m. economic data. Stay with us. This is Bloomberg.
As I said, you see, you get the news, you get the manipulation to the upside, which we had. Here was the news. Here, look at 27. News was overall worse than expected. We took the buys, and then it goes the way of the news. Now we want some kind of pullback so we can enter a sell again on the open. That's our goal. Like I say, unfortunately DAX is doing exactly the same. It's dropped through the bottom again. Again, we just keep redrawing down to our next support zones here, look, and wait for RSI to confirm. We don't enter here. We've missed a trade, you know, again, FOMO, but we would have got in on a sell just here. As soon as we see it go into our oversold zone, and that would have been, yeah, another 100 points to the sell. So easy to follow. And all the meantime, we're trading with inside a trading system. This is the thing. We're waiting for these bigger legs because we love trading the legs of double tops, double bottoms. But at the same time, we're taking advantage of going with a trend by micro scalping in and out using the RSI and price action. Gold now continuing on its dip down. Say going with the news, USA30, like I said, they always sync together, and then you'll see them go the opposite way on the open. Reversal RSI is now down to 30. If it gets to our oversold zone, obviously we're in again for a sell.
Instead of working alone, don't we have a better chance of solving all the world's biggest challenges when we work together? At SABIC, we believe the chemistry between people is the chemistry that matters. SABIC.
This is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We'll see, once we get RSI passing through our average line, then we're looking to take aggressive buy 1, 2 and 3 on the way back up. Unless our heaviest support zone is broken, then we're looking to the extension part. And we're looking to sell down to 35606. %68 bearish momentum at the moment. You can see the bull and the pair power. This is on our custom dashboard. Market's declining, neutral but falling, and the 68% daily volume already achieved on the US30.
New York City to our audiences around the world. Good morning. 30 minutes until the start of trading. We are seeing start with Nasdaq leading the trend lower. 0.7% decline after better than expected economic data brings forward rate hike expectations. I'm Lisa Abramois in for Jonathan Farrow. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Let's hope we can get a nice pullback and potentially more sales on gold. In the open, let's see.
We begin with the big issue, an economic pep talk ahead of the holidays.
Record job growth, the strongest recovery in the world. Our economy has created a record 5.6.
This beautiful manipulation there. Get the buy, then it goes the way, and now we should get the buy on the open. And gold is exactly the same. Down, down, up manipulation, down. Then a reversal and down again. This is what we want. 1782 kind of level.
That's the happy talk out of Washington, D.C. The president painting a bright outlook for the United States economy.
And then we've got the
FOMC minutes and digesting a host of economic data.
58 minutes.
Abby Doolittle joining us now with the numbers. Abby?
Well, Lisa, it's really pretty incredible here. A host of economic data out this morning on a monthly and quarterly basis even, but stealing the show, it's all about weekly jobless claims.
Yeah.
Absolutely plunging to a level not seen since 1969. Initial unemployment claims fell 71,000 to 260,000. Really sharply 199,000, excuse me, a big drop there, and perhaps a cap in the feather of the Biden administration, but certainly putting pressure on stock futures as you were talking about. And then let's take a look at PCE, because we have seen a little bit of a revision to the upside. GDP on a quarter-over-quarter basis up just slightly. Personal consumption also up, and then that core PCE just coming in basically flat. So again, the jobless claims are stealing the show, but that Bloomberg Dollar Index now at the highest level since July of 2020. Yields higher again, to your point, Lisa. This solid economic data suggests that the path to raise rates is clear and ahead.
And raising yet again the question, Abigail, of when is good news, bad news for markets. Abigail, thank you so much. Joining us now to discuss John Hancock's Emily Rowland, Ironside's Mary Knapp, and Malcolm Etheridge of CIC Wealth. Emily, I'd love to get started with you. Are we entering a regime where good news for the economy is bad news for markets?
Lisa, I've been thinking a lot about what I'm thankful for right now, and I'm not so thankful for this return to this. You know, it's a tough one in terms of our role as market strategists, but clearly we're seeing a nice reacceleration in the Q4 data here. Q3 wasn't all that great. We look at things like the Conference Board's leading economic indicators, which does reflect some of the data that we've seen this morning, and we are seeing a nice kind of, pick up actually in the data versus last month. So I think, when you translate that over to how you think about investing, and I know you'll probably get there, we've got to be careful here. We've seen a huge run in the equity market so far in Q4. The S&P 500 up almost 10% just in the fourth quarter alone. So I think we need to be careful here about, loading up on risk as we head into the first part of 2022. We want to be thoughtful about that. We want to own some cyclicality to play this continued rebound and this continued
let's watch this RSI.
recovery here, but we want to just kind of pump the brakes a little bit in terms of loading up on cyclicality.
Barry, do you agree? Is there a sense that you'd like to be a little more cautious at this point?
I would agree with Emily that the first part of the year could be pretty tough for equities, in as much as this claims number, although non-seasonally adjusted, it wasn't nearly as good. But it does imply that in December, claims could get down around the pre-pandemic levels of around 220. We're probably going to get a very strong November payroll report. I do think that sets the stage for an acceleration of the taper. The seasonality and economic momentum should be strong enough or enough of a positive for equities to continue to rally through the end of the year. But it wouldn't shock me if the first trade in 2022 isn't lower. Something like what happened in 2017, the end of 2017, early 2018, or end of 2015, early 2016, after the Fed ended zero rate policy. That I would agree. The first part of the year could be tricky.
Malcolm, a lot of people saying that.
We've got 25 minutes, so we'll be back in 10 minutes. So we'll keep the stream on, listen to Bloomberg. I'm just going to go make another pot of coffee, getting ready for the open. Nice one.
Well, it is definitely important to keep in mind that the start to the year isn't necessarily how we finish. So we have been kind of taking the same note as others, in that it's going to be choppy, and we don't expect necessarily for it to be the same old same, right? Riding that FANG wave probably isn't going to be the way to go through 2022. And so we have been encouraging people to diversify away from the mega cap tech trade and maybe look at things like healthcare, right? Through the remainder of this decade, from all of the wreckage that's come from COVID, we expect healthcare to be a really great place to find opportunity and really see growth happen. And so it's more of a focus on getting away from where we know the majority of the carnage is likely to be, and not necessarily trying to time it perfectly and say we should be out of the market completely because we just know where we're going to get hammered. We never know.
All right, well, there's a lot here, and we're going to parse through it as we discuss over the next hour. But in the meantime, investors are awaiting, adding to the soup of the day, FOMC minutes to be released at 2 p.m. Eastern. Key question is whether there could be any guidance as to an acceleration of the taper. Mike McKee, what do you think of that?
I think that you put your finger on it, Lisa. That's what many on Wall Street are going to be looking for is, will the Fed have discussed at least the idea of a faster taper? You can see it in one chart. This is the taper plan they have now, $15 billion a month. Does that get steeper on the downslope if they try to give themselves some more optionality to begin raising rates? That'll be the first thing that everybody is looking for. Second thing is, what do they think about inflation? Because, of course, that's going to influence all of this. At 10 a.m. this morning Eastern time, we get the PCE numbers, and you can see the white line there, the month over month has been declining in terms of how fast it's been going up, even if the annual rate is rising. If we see that pattern continue, they'll feel a little bit better about it, but we'll see what they thought about it 3 weeks ago when they last met. And then finally, we're going to be looking at overall what we have in terms of the inflation transitory story. It shows you there the PCE numbers that I was also talking about, and how different they are from month to month to the year over year. The taper last time took, remember, about a year. This time they're under pressure to do it a lot faster.
Michael McKee, thank you so much. That is the FOMC minutes that are coming at 2 p.m. Eastern. Here's Michael Strobeck of Credit Suisse weighing in on the road ahead for the Federal Reserve. Take a listen.
We have in our books a rate hike by the Fed towards the end of next year, and then probably 2023 they will pick up the pace to almost perhaps 5 steps, so that will in this cycle maybe ending up at sort of 275 in the US. And with that, other central banks can follow, but the Fed will take the lead, will take a careful note of their minutes. My expectation is that they will become a tad more hawkish, but not something that will upset markets.
Meanwhile, the expectation, Barry, as you were saying, is for some sort of acceleration in the taper. What are you looking for in the guidance from the Fed to confirm that view?
When that FOMC meeting ended, I wrote that I called it an optionality assertion. And I was speculating as to whether they were just appeasing Waller and Bullard and some of the others that really wanted them to do a faster taper, or whether they were really willing to change the strategy that's been in place since the measured removal of policy accommodation back from 04 to 06. The speeches that we got late last week, again from Waller, but more importantly from Clarida, would imply they might be serious about it. And in particular, they should speed up those mortgage-backed securities or the reduction in mortgage-backed securities purchases. So I'd look for comments about that part of it. If they got that granular about considering whether they should slow the mortgage purchases more quickly than the Treasury purchases, then it's real. And then, if as I said, we get a strong payroll report in early December and we don't see further shock deceleration in the inflation numbers, then they probably go ahead and do speed up the pace.
Emily, do you agree that this is a very likely outcome for a Fed that has remained otherwise incredibly dovish?
Yeah, the Fed is increasingly in between a rock and a hard place here as the more persistent inflationary pressures play out. As we see this better than expected economic data pushing the short end of the curve up, we're seeing some modest rise in the 10-year Treasury. But to be honest, the yield curve has stayed around 100 basis points, right? The difference between the 2s and the 10s. Typically in previous rate hike cycles, if you look at the last two, the yield curve was closer to 300 basis points. So the Fed actually does not have a whole lot of room here as they risk raising rates not only into a decelerating growth backdrop, which is what we see heading into next year, but also into a pretty flat yield curve that can actually only raise rates 2 or 3 times before they really compress or potentially invert the curve. And I think the key implication is that is really going to shorten this cycle. If the Fed can stay on the sidelines and recognize the fact that growth is decelerating, maybe the cycle can be extended and risk assets can continue to benefit.
This is a really interesting dynamic as we get data points that hint at some of the strongest readings for the U.S. economy in decades. Malcolm, the overconfidence that perhaps people have of the staying power of this dynamic, and it speaks to what Emily is saying, which is if the Fed raises rates, perhaps it'll shorten the cycle much more than people are prepared for. What are you seeing that confirms that in both the economic data and the markets read through?
Yeah, I think overconfidence is the perfect word to use there. We're certainly paying attention to the more extraneous factors, like the fact that you've got unemployment benefits that have already dried up, and you've got the evictions and foreclosure, moratoriums that'll be ending soon, and forbearance on student loans, and all those sorts of things that have put extra money, quote unquote, in people's pockets temporarily for the last, year and a half, 2 years now. And so people are walking around feeling a little bit more rich, and it's a little bit more of a sugar high than is actually there. And so we feel like when those things start to show themselves in the market in the economy next year, it may be too late, right? We're showing the Fed all of these signs that the economy is healthy, things are great, we're chugging along, and whoever wants a job has a job. I think back in September, the number was something like 1.4 jobs available for every one person who's looking for a job, right? And so I think that what's happening is this dislocation where there's a sugar high that's happening on one side. Americans are feeling rich. And then on the other side, the Fed is looking and going, okay, well, if you guys are doing okay, you don't need me. Maybe we don't have to keep rates at the floor like we have, and we can stave off some of this inflation. So it'll be interesting to see whether Powell is able to make that very tough, unpopular decision to raise as aggressively as he cut. But we'll see.
All right. Well, all of you are sticking with us. Emily Rowland, Barry Knapp, and Malcolm Etheridge. Right now, about 18 minutes until the open, and we are seeing perceived weakness as rates rise. Meanwhile, over in the crude market, you're seeing a complete shutting of any potential wish from the Biden administration as prices rise yet again. Crude up almost 3% on the day.
Instead of working alone, don't we have a better chance of solving all the world's biggest challenges when we work together? At SABIC, we believe the chemistry between people is the chemistry that matters. SABIC.
Where's the common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It is a good signal from the authorities that they are concerned about the high oil prices.
It's a diplomatic choice.
It is a temporary move.
What we really need is aggregate supply to rise further.
You're aligning with countries all over the world, so you have a little bit more cover.
That's not something OPEC Plus wanted to see happen, is to have this coordinated strategic release.
I think OPEC Plus still hold the upper hand here.
We are likely to be in a surplus market next year versus the deficit that we've had. So I think they're going to calibrate their response carefully to that.
The release of strategic oil reserves underwhelming the market. Crude prices logging their biggest advance in 2 weeks following the announcement. We are seeing a bit of a dip right now, however, but still very much not what the U.S. administration would want to see. Energy Secretary David Turk saying the White House still has other options remaining on the table. Take a listen.
We've been working on this release from the U.S. side of things, and in collaboration and in parallel fashion with some other countries around the world. As that news has gotten out, the markets have baked in the impact of this release. The president does have other tools in the tool belt as we need them over the coming weeks and months.
Joining us now, Anne-Marie Hordern, to get the latest down in Washington, D.C. Is the White House disappointed with the market response?
Well, Lisa, they have to wait to see what happens in terms of how this trickles down to the prices at the pump for consumers, right? This is not so much about the oil price. It's more about what this means for everyday consumers. And they've been worried about inflation. You could see that time and time again with the rhetoric really changing at the White House. And one of the key concerns of inflation is, of course, higher gasoline prices. Now, a bit tongue-in-cheek, but today gasoline is down on the average for the nation only 1 penny. This is going to be very difficult to see the trickle down happen with an immediate effect. What we can say about the oil price is that it is a little bit underwhelming in the sense that traders were potentially expecting it to be a lot more coming out from this SPR release, as well as alongside other consuming nations. But over the past few weeks, just this verbal intervention, the jawboning from the White House, took WTI well below $85 a barrel. So they were able to achieve a little bit of alleviation on the price point over the past few weeks.
Were they prepared for the potential pushback from OPEC Plus that they seem to be getting?
Well, already we're hearing just now from Fatih Birol of the IEA. He's talking about the fact that OPEC Plus has about 6 million barrels of spare capacity, and that on top of OPEC Plus and Gazprom, which is a natural gas problem, that these individuals, these countries, are creating a tightness in the energy market. So potentially you're going to see that rhetoric really start to ramp up. We have to wait and see what OPEC Plus does next week. There is a chance, given the fact that consumers have come out and they're going to be putting more barrels into the market, OPEC could potentially dial down what we are expecting, which is another increase of 400,000 barrels a day. And this can get tricky geopolitically, Lisa, with this White House.
Anne-Marie Hordern, thank you. And by the way, Tom Keene was totally out of line. You do not look like a pilgrim. You look fabulous. Happy Thanksgiving. In the meantime, Flo Banks, SD Dweck, saying a lot of the SPR news was already baked into prices and warning of the potential political consequences. Take a listen.
yes, prices went up yesterday and they're holding firm today, but they've been down about 7% since the U.S. started talking about releasing from the strategic reserve. So we have seen a cap in the rally. We have seen something of an impact. The other side of it, though, is if the impact was done now, what happens if oil prices stay higher and the U.S. is going into midterms and the impact is limited and maybe they already used this bullet?
Still with us, Emily Rowland, Barry Knapp, and Malcolm Etheridge. Malcolm, this idea here that just by job owning, the U.S. administration brought down prices, do you buy that, or do you think it also has to do with the wave of COVID cases that we've seen in Europe and beyond?
Yeah, it's very unlikely that just by using the bully pulpit, Biden has been able to single-handedly bring down oil prices, especially since the folks who control the oil reserve, OPEC or OPEC Plus, are notoriously hardline, and also the agreements that they tend to make, which we know are usually thin handshake agreements that, 2 weeks later they go back on and decide to start pumping secretly and those kind of things. It's very unlikely that just by getting out there in public and talking about what we want to see happen, Biden was somehow able to make a significant difference in where oil prices stand. There's always some extraneous factors below the surface, like you're talking about with COVID lockdowns and that sort of thing, that probably paid 99% of the part here.
And Emily, I saw you nodding there. I wonder if we can extrapolate further and suggest that perhaps oil prices could remain under pressure as we see this wave continue to accelerate, not only in Europe, but in places in the United States.
Yeah, Lisa, I was nodding because I think the narrative really has been around, the supply side. And certainly, it's always a game where OPEC is a key player, and we'll have to see if they, what they do in terms of increasing production. But to us, a lot of this is around the demand side. We're sadly seeing increased lockdowns and COVID cases in Europe, which could have a key impact on demand. We're also, very importantly, seeing a broad slowdown in China. We're actually seeing China's role as the growth engine of the global economy slowly fade here. And without having China a big participant in a commodities boom, it's really hard to see that. Finally, we're seeing demand destruction, play out as oil prices have increased. And we've already seen that, as you mentioned, come down. And then technology advancements, which frankly, we see putting longer term pressure on fossil fuels and creating lower oil prices over time. So we see commodities in a secular decline, and we wouldn't overemphasize them in portfolios today.
Well, Barry, this speaks to Emily's idea of lower long-term rates next year, perhaps less momentum than people expect in the U.S. economy. Do you agree with that? And do you think that oil, frankly, is more a reflection of what's going on economically than it is with respect to supply-demand dynamics on the supply side?
Yeah, I'm on the other side of all this. I'm a buyer of energy. I'm a buyer of energy stocks. We had, as I understand it, the biggest global draw since August of 2020 last week. So the psychology of lockdowns in Europe and the release of the SPR put some temporary pressure on oil, but it's headed higher. Policy in the U.S. is pushing the wrong way. I couldn't help but think about the irony of President Biden's press conference yesterday as he's talking about oil-producing nations need to produce more. We're the biggest oil-producing nation. So his policies have been pushing back the other way. I think crude is headed significantly higher. I'm a buyer of energy stocks. I don't think that Fed policy, the idea that the twos tens curve is not at 300 basis points. It's only been at 300 basis points a couple of times, and that's when we locked the front rate at 0.
Yeah.
The real rate curve, as of late last week, was lower than it was at the September FOMC, the June FOMC, August of 2020 when nominal rates bottomed. Fed policy, even though they're starting the tightening process, is getting easier. We never really ran out of economic momentum, even in 2018, related to Fed tightening. So yeah. I think economic growth is going to be strong next year. I think demand for fossil fuels is going up, and I'd buy energy stocks.
This is what makes a market. I love getting all sides of the story. Coming up, the morning calls and later retailers taking it on the chin with lackluster results, renewing.
Instead of working alone, don't we have a better chance of solving all the world's biggest challenges when we work together? At SABIC, we believe the chemistry between people is the chemistry that matters. SABIC.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seem to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Farrow. Quick look at a soggy market ahead of the Open. The S&P down about 0.5%. Right now, time for our morning call. Some of the analyst recommendations on Wall Street this morning. First up, RBC upgrading Chevron to outperform with a $145 price target. The analyst expecting shares to benefit from a strengthening commodity cycle. Next up, Argus downgrading Alibaba to a hold. The analyst forecasting slower growth amid increasing competition and regulatory hurdles. And finally, Stifel downgrading Jack in the Box to a hold. The analyst highlighting a number of concerns, including labor headwinds and declining margins. Coming up, it's the opening bell. We'll talk all about rate fears as they bleed into tech stocks. This is Bloomberg.
When you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
Okay, we're back and here we go. Let's enter some trades. Let's enter those. Got 30 seconds to go for the open. I'm going to put some buys in. We're going to put some sells in now. And let this fly. We know which way we're going, so I don't give out financial advice. For those of you who watch the stream, you know what we're looking for on here. This is perfect. US Open, gold.
The other has an ego in the orbit of Mars. Who's that?
C. We get some nice big drop off we are before some buys, so we're just holding on here. There we go, everybody, good luck.
That want their own financial system and their own culture.
and it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment?
Nice.
People were talking about that all day yesterday.
Good. There's the US Open. We can just adjust down to this next level.
This countdown to the Open. I'm Lisa Bromwitz in for Jonathan Farrow. Moments away from the opening bell. We do see equity futures near the session lows. We are seeing the S&P now at 46.66. We're seeing them down about 0.5%. The Nasdaq leading the decline, 0.7% decline, with the Russell in tandem. And really, what we have been seeing is the yield market driving this after the economic data that we got earlier in the day. The expectation is for perhaps a sooner rate hike, at least as represented in the bond market. 10-year yield 167.91, and we've got the 2-year yield also.
Wait for RSI. Just need to wait. Just wait for the RSI to pop up.
Lowest number of initial jobless claims for a weekly basis going back to 1969.
Gold.
The euro at 111.93 versus the dollar, breaking to new lows as we view the divergence between these two continents. And crude actually lower today. Perhaps the administration will be happy. Let's get straight to the markets desk, where Bloomberg's Kaylee Lyons is looking at some of the retailers taking it.
And then we're just closing some trades off now. Beautiful, beautiful. What do we get on there? Okay, we got a $60 win on US30 buy, a $35 win on US buy. We got a 15 on the sell on gold. We got a 32, and we got a 18. So there you go.
And of course, they all have in common is supply chain challenges. Gap actually cut its outlook because of those, quote, acute headwinds. Instead, it has affected its ability to meet strong customer demand. And the company said that equated to an estimated $550 to $650 million in lost sales. And when you add another $450 million in higher air freight costs, that adds up to $1 billion problem. And of course, Nordstrom, for its part, talked about shortages in women's shoes and apparel, and it obviously raises a massive question about what for these companies and other retailers, what their fourth quarter is actually going to look like as we head into this holiday season with Black Friday coming up in just 2 days. Are they going to have the inventory there? And more importantly, what are their margins?
I'm just going to wait for some bigger buys on US30. Maybe sells. Who knows? Depends which way this is going to go. But that's the open nailed there. That was. So that was 1, 2, 3, 4, 5, 6, 7 trades in 1 minute 42 seconds there. The bagger's a couple of $100 there at least.
Delivering a warning, forecasting a complete reversal next year. Take a
look. And I want to go back in on US30 here in a second.
We get next year, and as supply kind of picks up, we actually see demand curtailed.
Move this.
We can consume a lot of things, and tech hardware is one of those areas. And then it's going to take a little time to work through.
See price action on here. Just waiting and watching. So you got to do. I remember we've got the Michigan consumer sentiment coming up in 26 minutes, along with the home sales. Expected to be worse. Expected to be worse. And expected to be good. So we're looking to take some sells on here.
I think it will come more from a macro picture of rates.
Yeah, I think it's a combination, Lisa. And, we're not overly bearish heading into next year. We just want to recognize the fact that the comps are going to be much harder. They're going to go from being your, best friend to your
gold. If it gets into the neutral zone and pops up, we'll take some buys on it.
This fiscal bazooka,
Vice versa on US30 now 36 RSI is popping up.
I think that's a once-in-a-lifetime thing that we're just not going to see repeated again into next year.
Told you the first 15 minutes is where it all plays out. This is where you can get in and out, earn your money, and sleep for the rest of the day if you want. And we're out. Oh, 3 nice wins on US30 buy. Beautiful, beautiful, beautiful. What did we get there? Beautiful spike up. Look at that spike. This is what I'm talking about. Manipulation the opposite way. Just hold your nerve and it comes good. Hold your nerve, read the market. That, perfect. There's the buy you were waiting for on the open.
You actually find that in tech. We want areas that have solid balance sheets, good cash flow, ability to grow organically, even as the economic backdrop starts to moderate.
Malcolm, it raises a question about which companies have power over their backdrop. What's priced in?
I'm thinking still about what Kaylee was talking about.
We've got 73, 74, and 36 there, so that's another 200. Perfect.
Concerns about supply chain disruptions.
Post on my results in the group so everyone can see.
Is this a management issue or is this a sector issue as they face specific issues?
Well,
Let's see if this pushes back up now. We're into the neutral zone. Take more buys if it pops out the neutral zone. You know how to play this.
Because one of the things that's also causing the quote-unquote issues that we're seeing in the economy as far as more dollars out there chasing fewer goods and services, right? That's basically why we have the inflation issues we have right now. I think that what's important to also factor in is that the hourly worker shortage, or the war for hourly
More than smashed our target today already without the news, and I've only taken one loss. Not bad. Oh yeah, here you go. Perfect, perfect. Quick, we're back in. We're back in.
Hasn't had this type of buying power because they haven't had this type of power to
Brilliant. 3 more.
at the same rate.
29, 22.
And so I think what we're seeing is places like Target that reported really
Brilliant.
good numbers. Best Buy has actually had some decent numbers, even though they're getting crushed. Like
This is how you scalp.
Places that everybody goes and shops. It is not seeing the same types of supply chain issues because, as we talk about all the time, the Walmarts and Home Depots can create their own last mile if they have to. But the higher end retail, like the Nordstroms out there, like
I told you guys, wait for that pop up.
really see the dislocation and the breakage in the supply chain, because folks who have the cash to go and shop at a place like Nordstrom, they can wait. They don't have to pay the higher prices. They know what things actually cost. And so it's not a thing where they're going in there to buy staples.
Barry, do you agree that basically you can
I just
parse
want to
through?
jump in real quick.
Carry on.
Oh, Lisa, I was just going to joke about
That,
I
perfect.
really can't wait for shoes. I just want to throw that out there. So
Thank
I'm
you.
just going to disagree with Malcolm on that.
Nice second leg W, as I predicted. Sometimes it's nice when it comes together, but this is not magic. This is following market structure. It's sticking to a time frame. It's learning how the market moves, accepting the fundamentals, drawing the patterns, having an RSI. You know what I mean? It's not rocket science. People overcomplicate it.
The overblown story of 2022.
Emily really threw me for a loop with the shoes comment. I used to be known as the Imelda Marcos.
It's a great day. That's like 30 trades, 20, about 27 trades today. We've easily blown our target. Look at that. And gold, you see, still heading to the downside. But again, gold, we will take a sell. If it breaks the RSI average line, we'll take a buy if we come out of the neutral zone. All you got to do is wait. Too many people are too panicky, too anxious to get in on a trade. All you got to do is wait for that confirmation. Look at the pattern. You're trying to, you know, if this is a buy, you're only going to be taking it to the next line of resistance. You know, if this is a sell, you're going down to your heavy support zone, breaking out our breakout zone. Just got to wait and be on it for the confirmation.
Much of 2022, but clearly there's pockets where companies are more.
Have a quick look at DAX. Yes, this is the pop we wanted on DAX as well. There you go. Look, we reset our W pattern, hit that heavy support zone. Now it's popping. Here we go.
Wilson or Lisa Shallett's argument that this will be a shorter business cycle.
Yeah, in the same pattern.
Near the end of it in 2022. So I still think that operating leverage will push margins on balance higher. You have to choose your sectors for sure.
Well, talking about choosing sectors, let's take a look at software and internet stocks where you see a rising rates fueling some serious weakness. And this has to do with the high valuations we already have seen coming into this period. Abigail Doolittle joining us.
DAX.
We have seen a lot of pressure for the last couple of days on those tech stocks, on the idea that rising rates will really bring valuation into question. But we've also seen a lot of pressure on the truly high beta stocks. This year's winners earlier this year, your SPAC indexes, your IPO indexes, even China Tech at earlier this year, peaking now down in a big way, at least China Tech down more than 30%, one SPAC index down about 10%, and an IPO index down too. So high beta losers, beta of course measure volatility or risk relative to the broader market. We're seeing less risk-taking in the M&A picture as well. M&A volumes down in a big way from earlier this year. One point in February, there was about $68 billion worth of M&A deals. You can see it steadily declined as the year has gone on. And very interesting, I've not heard about penny stocks in quite some time, but penny stock volumes are down this year relative to the volume volumes for NYSE and NASDAQ. So risk-taking
really here, at least, through these various ways of looking
it is
down just a bit.
All right,
Although I wonder if there are any
stocks left after the asset inflation we've seen. Abigail, thank you so much. RBC's Amy Wu Silverman expecting big tech to feel the pressure with Chairman Powell starting the Fed's move toward normalization. Listen.
We saw a pretty dramatic shift in hedging. We saw a lot of it in Qs both through year end and through next year, and that skew indicator is starting to move. It's becoming more bearish, which really makes sense in the context of what we know Powell has to do in the coming year.
This is probably the big polarizing debate, big tech. Barry, what's your view heading into 2022?
So I downgraded tech back in August of
oil as well.
My idea is
hanging around 79.06.
the benefits of digitization, the movement to the cloud, are going to accrue to
Go back to US30, let's have a look.
Producers of that technology.
Yeah, a bit of a dip we expect, but I'm expecting to push on up. Doesn't matter to us now, we've traded it, we've done it, that's it. We don't mess around, we've done all those trades in the open there. In 6 minutes we've done 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades, 10 positions taken, all winners, and we're done within 6 minutes.
We talk about software, for example. That's a key part of capital spending. I think demand will be good, but the stocks are so expensive that for me, I can't bring myself to be overweight them any longer. And market weight, by the way, still gives you a big exposure to tech because they're so integral to the U.S. industry.
Yeah, Malcolm, what's your view?
Well, we actually see tech as still a great opportunity to see some growth, but we do think there's going to be a rotation away from the 5 or 6 names that have kind of led the way for the last few years here. We see for sure there's ways to bet on the market, the tech space, without having to take on the risk of owning the entire thing. So the one place we know for sure there's going to be demand is in the chip space, right? So you got AMD, you got NVIDIA, Taiwan Semi, places like that where we know we're going to have years and years of hard work to try and catch up with the chip shortage. That's a pretty safe bet as far as looking for an opportunity inside of tech, that subset that we know is going to have some demand.
Emily, you said earlier that you do like tech, that you think that probably they can escape some of the margin pressures. What's your view and how this dovetails?
Let's see how this pulls back or not.
Is it that if
Move this arrow.
raises rates sooner, that it will actually lead to
See, that was the US Open.
which is better for big tech?
Yeah, I think tech actually as a sector can withstand higher rates. Tech is not really what it used to be. These are high free cash flow companies. They're actually cyclical. They have pricing power. They have that quality element that we like, which can actually do quite well if rates do move higher. And frankly, we think rates are going to chop around as we head into next year, which is a fine environment for big tech. Again, we are overweight. We want to own quality. We want to own companies, to Barry's point, that can benefit from this new CapEx cycle that's unfolding, which is really concentrated in spending on technology.
All right. Well, my thank you to all of you, and have a wonderful.
We've got 15 minutes till the news.
Malcolm Etheridge.
So we've got no positions open at the moment. We are just literally waiting for this Michigan consumer confidence, which is going to be not unexpected, but still above 50, so still in the bullish zone. And we'll see how it correlates with the new home sales, which is looking to be worse. Obviously, -2 predicted, over 14% from the previous. That's a hell of a drop. So we need to see that even way worse for it to shift anything of the dollar or the US30 down. But if these two come out worse than expected, we should get a move to the downside. Again, we will wait and see. We're just going to trade US30 on this because it's slower moving, which I like, rather than gold. Again, that's your own personal choice. Loading up on US30, making sure we're ready. The Dow Jones has gone from +5.5 to 4.6 down now, you see. This is how everything has kind of dropped off.
I think all companies, individuals, and countries need to understand the impact of AI and what can and needs to be done.
And this is going to be probably the last fundamental trade of the week, maybe one tomorrow.
Countries need to look at.
Tomorrow we've got Euro consumer confidence for the DAX pre-market 1 hour before, that might give us a direction and edge on the open for London, and that's really it then. Nothing, just loads of Fed speeches which we ignore, and Friday obviously so it's all holiday time. So yeah, I mean, again we might trade this one. It's not looks a decent result prediction, but really this is it today. And some of you guys will trade the FMOC minutes. We did oil last night and had a nice win on that. So for those of you who know how to trade oil in the team, you can trade this result, the EIA crude. I'll be ending the stream once we've done this news event. We've been going, you know, nearly 2 hours or so, so I have to keep it too long. We've got in and out. I just want to show that you can do your trading day within an hour and a half, less than that depending on what your goals are. You know, but we trade, like I say, we did a bit of a London session and we did some Asian session. You break into little blocks, time the right times of the right system and analysis, and taking the fundamentals, and you can be consistently profitable. And that's what it's all about. We take losses, of course we do. We've had a loss today, but it's all about the bigger picture and, you know, the fact you come out with more profit than losses.
It's such an interesting new world.
The world is changing.
I'm following some kind of structure and pattern.
It's about being the best. While everyone is zigging, we're zagging.
So now we're waiting. US30's dip back down again. So waiting for this news event to see what we're going to get. And 12 minutes to go. We'll just continue watching US30, listen to Bloomberg.
Likely that this pandemic will be endemic over time. I mean, it is already more or less endemic in some geographies in the world, which means it will be like the flu. It will come back on a regular basis and people may have to be vaccinated.
Germany's Olaf Scholz announcing that the country will consider vaccination mandates to help slow the spread. For more, let's bring in our own Michael McKee. Michael.
Good morning, Lisa. The German government is now in place, not ready to take over quite yet. They have to go through the Bundestag, but the three leaders of the coalition parties have been holding a news conference within the last hour. And the leader of one of the parties, the Greens, Robert Habeck, said they are taking office at a time of crisis. And you can see why in one chart, and that is the German COVID cases. Look at that spike. Not only is it up, but it's up way past anything that they have seen since. Now, the new German government has ruled out Angela Merkel's request for another lockdown, but they are going to have to do something because the business confidence numbers out of Germany today, which a lot of people follow for an indication of where the economy is going, have just collapsed. You're looking at some of the lowest numbers we've seen since the pandemic hit for both the business climate and for business expectations in particular. But the new German government faces the question of what do they do about it. The new coalition led by Olaf Scholz there is saying they're going to reinstall the debt brake by 2023, prohibiting deficit spending. That was lifted so that they could address the pandemic in 2020. They will back EU deposit reinsurance, which is an interesting development as the Europeans try to put together a stronger banking union. And they'll set aside €1 billion for pandemic bonuses in terms of some of their economic policies. But right now, new government ready to come in within the next week or so, and they're facing a big problem.
Yeah, Michael McKee, thank you so much. Right now, we see the German DAX falling for a fifth consecutive session.
Yeah.
Barry of Ironside Partners is still with us. Barry, is your view that Europe looks increasingly negative versus the U.S. as a result of the resurgence in COVID cases?
I've never.
If you just zoom out, listen to what they're saying, you can see here, look, even on 3 minute, look at this consistent drop.
The dynamism of the economy in Germany in particular
Started the drop on the 19th, and now here we are on the 25 days later, just sell, 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 sell. Obviously, if you're swing trading, you'd have got in here and be holding it. So, shows even on the 3-minute time frame, you can see this price action everyone talks about.
Restructuring global supply chain. So, listen, until Germany.
All we trade is these little pullbacks, little corrections before the market ends up going in its general direction again. Also, I'm not too worried about the sell-off because we've got indicators to help identify potential key levels to get in on. As I've identified today, we could have got in on 1, 2, 3, 4, 5, 6, 7. There were 7 trades just on DAX today alone.
Do you see that continuing, or do you think that people have gotten a little ahead of themselves in terms of the ECB Fed divergence?
Gold now popping down. Lot RSI. Can we get getting ready for a sell on here? Look, if it crosses our neutral, it could bounce on this. You see, it's like a support and resistance line for the RSI, the average taken over a period of time. So we don't enter until we get a break. See now, look, it just breaks, it just tweaks up. Wait. See, it's just folded up. 42.
When we were losing interest in just financing the rest of the world and absorbing all these huge trade surpluses.
There's 30.
I think it'll be a point of
Call that the second leg there.
To follow the Fed.
Call that. Yeah.
Probably a little overdone at this point.
Thank you so much.
RSI is coming through the neutral zone, so it could be on for a sell. Like I said, I'm not going to enter a trade because we are close to news. 8 minutes to go.
Well, good morning, Lisa. Energy is your leader this morning, but to the downside, you have consumer discretionary and tech dragging down the index. Industrial somewhere in the middle, despite that very strong forecast coming out of Deere in the face of their biggest strike since 1986. But it's tech that I really want to focus on. Autodesk stealing the spotlight lower after narrowing its full-year outlook and getting a wave of price target cuts from across Wall Street with its peers Salesforce and Adobe. They are dragging down the index this morning. It's worth mentioning those upside movers, though. HP and Dell both beating their estimates thanks to more spending on personal computers. Lisa, 2020 saw that major spending boom on hardware. 2021 losing some of that momentum. Let's see what 2022 brings.
Pretty, thank you so much. Coming up, the market-moving events that you need to be watching. That's next in our trading diary. And this is Bloomberg.
We can all recognize potential, but to truly unleash its power, we need a tool that takes us beyond the surface, that opens up entirely new dimensions of possibility, allowing us to harness this power with the knowledge, security, and speed to put us ahead of the curve. Copper, the unfair advantage.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases.
US30 just coming down now. Might get a retest.
Ask a question or visit SearchGo to find answers now.
Five minutes to go, guys.
I'm Lisa Abramowitz in for Jonathan Farrow. This is Bloomberg The Open. A quick look at markets. You've seen a deterioration
The longer the tape's gone on, the Nasdaq really leading the way down, 0.9% decline. S&P now at 46.63, down nearly 0.6%. Right now, what I am looking at is a comment.
Look at the NAS, look at the NAS, look at that drop. Beautiful, beautiful, beautiful. And could you got trades in on this? Could you gone, I don't know whether this is going to reverse on me, I'm scared. A reversal here, look, then a drop. Look at this, look. 1, 2, 3, 4, 5, 6, 7, 8, 9 trades all in this section here. You could have grabbed using our system, and I would say 100 points per trade. Easy, look, 106.
Time now for the trading diary. You need to be watching for the rest of the week. It actually is really active. In about 5 minutes, we're going to get personal income and spending numbers at the top of the hour. Plus, we'll get the University of Michigan Consumer Sentiment Survey and new home sales. The latest FOMC meeting minutes out at 2 p.m. And finally, U.S. markets closing on
That's what we're waiting for.
the Thanksgiving holiday. A lot of people are really looking closely at the University of Michigan Consumer Sentiment Survey. In particular, Danny Blanchflower of Dartmouth. He has come out and said, watch this space. We saw it deteriorate to the lowest going back to 2000.
This is it. This is the one he's all on about. 66.9. I reckon it's going to be lower than 60.
However, other indicators, not so much. The key issue is, do we see a rebound, or are people continuing to feel a little bit of a souring sense of optimism in the face of such high inflation reads? This will be one of the key aspects people are looking at as they parse through data that earlier today showed jobless claims falling to the lowest levels since 1969. Right now, after record high, 66 of them in 2020.
Michigan Consumer is the one we're looking for. 3 minutes to go, guys. This is the final trade of the day. Good luck to everybody. We know how to play this. I'm going in on US30. You guys can choose whatever you want. And again, it's nice if it correlates with the home sales, i.e. they all go the same way, and the personal spending as well. But like I say, to me, the Michigan is going to lead the way. Just checking US30.
For 2021. This was the countdown to the open. This is Bloomberg.
Pushing down. Is it going to be worse than expected? Are we going to get a drop down to this 3516? Are we going to get 100 points? 200 points? This is what true scalping is all about. We don't know. We don't guess. We take the market and we go with it. Keep on this now. We've got 2 minutes. Get ready for the countdown.
When your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people.
Here we go. 1 minute to go. Good luck, everybody. Final trade of this stream. Let's see. Look at all that news flashing. Plenty of news here to get the market moving. Possibly either way. This is even better as a scalper. I'm not bothered if it's a buy or a sell. I'm just going with the market. So, got key levels identified on our chart, on our AX trading system. Spiking, getting ready to pounce. Let's see. We're still loaded up. 10 seconds. Good luck, everybody.
what's moving the markets. Visit Bloomberg.com webinars.
On the supply chain, are you starting to see things improve? And if you are, where
Let's have a look. And we've got the Michigan way better. We've got home sales down as we knew it would be, and personal spending also good. So we're looking for buy, definitely. We've got a few positions. And we're just going to get ready to close positions now. We're done. Oh, what a win. Perfect. And we got 92, 60 and 48. $300. Come on. $300 in 38 seconds. Who else can show you that? There you go, team. All done. All done.
Experts estimate that it will take years before these services are restored island-wide. Much of the blame is placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovering from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on private citizens.
Look at that. Let's check the chart. There it is. Look at that. That's all we wanted to see. This is it.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina.
This is what scalping's all about. Why do you want to mess around with different systems when you can use market analysis, you can use the fundamentals to get your wins back? Done. Busted. A week's wage for a lot of people. 30 seconds done.
Communications restored. They may or may not have power, but basic services are in place. They're able to get.
I just opened 3 positions on that. That was all.
Outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was in the area where we're headed to the northeast region of Utuado. There are some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled the van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by a storm. He's been living in a
Perfect. Just posting in the group. Look at that. If you don't believe me, just back test these news events. Learn how they move. Pre-market manipulation, post-market going with the trend. Look at the RSI confirming that you're not just making it up, that the momentum is there. There's the move you wanted. Look at that.
Take off. These guys get left at the end of the road, and it's tough.
That's perfect. So that's ended us on 29 trades for the day, 1 loss. I mean, you know, great results. I love trading the news, fundamentals. I love trading the ACT system without the news, but with the news, you know, I'm just a fundamental trader. I love it, and I like to teach more people how to try and do this so they can live the life they want to live and just trade a little bit, get a bit of extra money, and not have to sit around all day waiting for trades and holding on to trades. This is what it's all about, true scalping. You know, and you can see it right in front of your eyes live. We got straight in on the buy as soon as it's released. Look, here's the last candle. Here's the result. News was better expected. Only the new home sales was lower, and only slightly lower. Everything else blew the results out of the water, basically, including the Michigan look, 67, brilliant. That's what you need, is all these indicators pushing the market. And instead of people running away from the news, learn how to trade it. You know, learn how to trade it. I'm not saying you don't lose, of course. Sometimes the market goes against you and you've got to learn when to get out of the trade. But on the whole, if you can look at price, action, market structure, you've got a good idea of where things are going to go to and the levels. Look, hit our breakout zone perfectly for retracing. You could have held for more if you wanted to. I mean, I just do scalp my way. But this is how you should do it. So I'm just going to say that's a great result.
Probably we are the first healthy The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to make sure chronic disease sites available, because they have been not going to a doctor, coming here yet. So we need a refill of this medication after maybe 54 days. It's not getting better. The only way that you can be able to see that is come to the ground, drive, and see the people talk to the people.
She's kind of launching her.
Brilliant. Well, that's it. I'll say we've done the best part of 30 trades today, covering all 3 sessions. It's not that we've traded all the minutes in the session, just the starts of the sessions, the news events, done, dusted. Probably a total, sat behind my screen, of 2 hours. You know, and that's how it can be done. Look at this pushing up now. Beautiful. Look, it's pushing up beautiful. Great news day. Love days like this. There is your gold look. If you want to trade gold, of course, you just go on the opposite way. And just post that as well. You could have got a sell on gold if you wanted to go, you know, obviously you go the opposite way on gold. Great. So, like I say, if you like how we trade, want to learn more, go to the website www.mohawkforex.com or click on the links in the description below. Give us a like, give us a subscribe, and try and share and tell people, you know, how we trade through scalping. And thanks for joining me. Thanks for rewatching this. We're just a small growing stream team, and we're just trying to keep this growing and show people that you can achieve consistency scalping. Simple as. So thank you so much for joining me today, and trade safe, and I'll see you on the next live stream. Take care all. See you later.